the channel. As expected, Amazon beat its Q2 earnings. If you're joining us for the first time, my name is Ahmed Sali Olbankudi, founder, chief investment strategist, Elite Pro Investment Management. As expected, Amazon beat its Q2 earnings. We're expecting that, and I deliberately use the word as expected because you can already see it. Amazon is seeing increase in web services. It's not seeing any effect of inflation or consumer less consumer spending. However, you should know that Amazon cash cow is real. The cloud business, even though they are behind the likes of Microsoft, Oracle, Alphabet, and all that, but the cloud business is actually a cash cow, and Amazon is making a kill out of it. Amazon actual revenue is 121.2 billion. What was expected was 119.5 billion. When I said what was expected, that's an estimate by analysts and all that. The EPS is 0.20 cents. The analyst expectation was 0.52%. Amazon actually made profit with its Q2 earnings, and due to the cloud business. Amazon stock price has gone up about 12%. I think it's trading for about 135 or 137 or thereabout. If you're an Amazon shareholder, you should be smiling by now. You know they recently had their split, so meaning that Amazon, there is about $14 hike today. If you have like 10, 20, 100 and all that, you can imagine that means you have like $14 times 100 or times 1,000, depending on the amount of units of Amazon stock that you own. Let's have a look at the charts. Let's have a look at details of the earnings. Let's see if we can get any information that is not visible on the chart. So let's see price action. Let's have a look. Here is the details of Amazon earnings. This is more of a summary breakdown. Let's go. Seattle Business Wire, Amazon, Nasdaq. Amazon is in Nasdaq. Today announced financial results for its second quarter ended June 30th, 2022. Operating cash flow decreased 40% to 35.6 billion for the trailing 12 months, compared with 59.3 billion for the trailing 12 months ended June 30, 2021, compared to last year. Free cash flow decreased to an outflow of 23.5 billion for the trailing 12 months, compared with an inflow of 12.1 billion for the trailing 12 months ended June 30, 2021. Free cash flow less principal repayment of finance, lease, and financing obligation decreased to an outflow of 33.5 billion for the trailing 12 months, compared with an inflow of 0.6 billion for the trailing 12 months ended June 30th, 2021. Now here's the thing. Free cash flow less equipment finance, lease, and principal repayment of all other finances, leases, and financing obligation decreased to an outflow of 26.1 billion for the trailing 12 months, compared with an inflow of 4.2 billion for the trailing 12 months ended 30th June 2021. Common shares outstanding plus shares underlying stock based award total 10.6 billion on June 30th, 2022, compared with 10.4 billion 1 year ago. All shares and per share information throughout this release has been retroactive adjusted to reflect 20-for-1 stock split effected on May 27, 2022. Net sale increased 7% to 121.2 billion in second quarter, compared to 113.1 billion second quarter 2021. So there was an increase there. excluding the 3.6 billion unfavorable impact from the year-over-year changes in foreign exchange rate throughout the quarter. Net sales increased 10% compared with second quarter 2021. Operating income decreased. This is good. Operating income decreased to 3.3 billion in the second quarter compared with 7.7 billion in second quarter 2021. Net loss was 2.0 billion in second quarter, 0 or 0.20 per diluted share compared with the net income of $7 7.8 billion or 0.76 per diluted share in second quarter of 2021. Second quarter 2022 net loss include a pre-tax valuation loss of 3.9 billion included in non-operating expense from our common stock investment in Rivian Automotive, the EV they invested on. Despite continuing inflationary pressure in fuel, energy, and transport costs, we are making progress on the more controllable costs we referenced last quarter, particularly improving the productivity of our fulfillment network, said Andy Jassy, Amazon CEO. We are also seeing revenue accelerate as we continue to make Prime even better for members, both investing in faster shipping speed and adding unique benefits such as free delivery from Grubhub for a year, exclusive access to NFL Thursday night football games starting September 15, and releasing the highly anticipated series, The Lord of the Rings, Rings of Power on September 2nd. These are all part of the things that are coming up. You should expect that Amazon is going to get better with within the competition with the others. The Amazon Prime is a very competitive business where you have the likes of Netflix, Apple TV, Disney, Discovery, and host of others. Let's have a look at the technical chart. Here is the technical chart, daily chart for Amazon. Let's go through the fundamental first. The EPS rating is 52, while the PE is 109. That's a lot, you know. The market cap is, I mean, depending on the industry anyway, but the market cap is stated here to be 1.373 billion. Shares outstanding is 10.2 billion, and fund holds 39% of it. And here is the EPS over the years and the uh, estimate for 2023. Um, Here is trading for $134.95, meaning that today it has gained $12.67, which translated to 10.36%. And let's go on to the weekly chart for other information before we analyze technically. And market cap is today here to be 1.373 billion, and shares float is 885.17 million. You know, and here the P ratio also 109. Um, 5-year PU range is 49 to 64. What I want you to see here is 52 weeks low and 52 weeks high. 52 weeks high is 188 and 52 weeks low is 101. So that means about 2 weeks ago or so, Amazon was trading for $101. Here, it is trading minus 28% from the 52 weeks high. Also, let's go on to here, the owners. You have 39% from banks, 1%, and insurance 0. Let's have a look at the industry. The industry is retail internet, even though it has a lot of sections in business interests, different sections of the business, but the main Amazon, as we know, is retail internet. So let's look at the checklist for super investors. Benjamin Graham, out of 13, it scores 8. You know, you can check, one after the other to see which of the metrics he passed and which of the metric he failed. Let's have a look at that of Warren Buffett. Warren Buffett, it's 14 out of 16. So meaning that it's two that it failed. Let's have a look at Peter Lynch. Peter Lynch, Peter Lynch is also, oh wow, Peter Lynch is 2 out of 8. This will really be interesting to see why, what are the difference between this metric and that of Warren Buffett. You can do that in your own time. Let's have a look at technicals. 10 weeks, which is a red line here. So it's actually trading above 10 weeks average, which is 116. That's the average of 10 weeks. 40 weeks is 145. So, okay, it's below one 40 weeks. So it's trading below 145. So that's here, as we can see, Amazon has been uptrending until recently. From the beginning of the year, it started trending down. Don't forget, we are still within, we're in bear market. Initially it was correction, and then we dip into bear market. I'm not sure if Amazon has bottom. I mean, none of us is sure if we've actually bottom, but it looks like here it did consolidated around here for a while, and then now we have it above 50. This moving average, which is 10 weeks. So, meaning that it looks like Amazon may have be back on the bullish move, but we are still generally in bear market. It doesn't mean that you won't have some bullish move within the bear market environment, but Amazon looks like it's already moving, on a bullish run. So let's have a look at it on a daily chart. On a daily chart, as you can see, Amazon was it was trending down, you know, of recent. That was during the correction via the bear market, but it has been, a lower high and lower low, or we say that it has been consolidating around here, because you can easily see that it's actually consolidating within a range. Or let me just draw the range here like this, and you can easily see within the range here. Now it broke out of this resistance. In fact, it was a gap up. I really don't like gap up in trading, or investing. If you are very used to it, when there's a gap up, that gap has to be covered. Or rather, it has a gap down, so I can even take advantage of it. With this, within this gap up, this gap has to be covered whether now or later. So one way or the other, I would rather exercise patience. This gap has to be covered, meaning that it might come back to around 120, or even below. So be careful, guys. Yeah. Otherwise, these are the technical information, and the EPS, as we the latest report, which is reported 22 June 22, was minus 0.2 compared to same time last year. It's 0.76, and the change not applicable. Earnings surprise, as you can see, minus 266.67%. Guys, do your own valuation. Be sure that this Amazon is good for your portfolio. Do not just buy stock because you watch a YouTube channel. And also, I will caution you. This is a gap up. This gap has to be filled back, whether now or later, maybe on the way down. So, if you want to add Amazon to your portfolio, I would ask you to be careful, be a little bit patient to see whether this gap will be covered soon. You have seen the chart, you have seen the price action, and you have seen the detail of the earnings. Please do not just add Amazon to your portfolio just because you have watched a video. Remember, we're still within bear market environment. There's still inflation out there. The Fed has just increased the interest rate again by 0.75 basis. Be careful. Do not just go and start buying Amazon shares because you watch this video. Do your analysis and be sure that it is good for your portfolio. Be sure that you are getting it at the right price. Thank you for watching this channel. Thank you for subscribing. We will continue to produce content that will support your investment journey. Please come again.